Hello and welcome to Forge & Foster's Q2 Hamilton Market Update. My name is Ben Ames. I'm Chief Investment Officer at Forge & Foster and moderator of the quarterly update. Huge quarter to digest for Hamilton. Lots of exciting projects on the go in the city and some massive updates from local, provincial, and federal governments, as well as private groups investing considerable money into Hamilton's downtown and city proper. As always, we have Forge & Foster's own Alex Manilovich for the insights and updates. So welcome, Alex.
Thanks, Ben. Always fun doing these.
Yeah, I see you got my memo about the blue shirt day, so that's good.
Thanks for bringing it up. Yeah.
Awesome. And our second and guest speaker for this quarterly update is a new partner with Forge & Foster, whom we're very excited about. He's here to talk a little bit about that, but also about his company, Addy, who is they're breaking down the barriers, allowing the public from investing in real estate by providing the ability to invest as little as $1 into real estate projects. So Mitch Jarvie, director of Addy, welcome to the call.
Thanks, Ben, for having me.
Awesome. Excited to learn more about the company as well as how we're working together. But with that, we'll start with the Hamilton update. I'll hand it over to Alex for the Forge & Foster Hamilton Market Update.
Okay, thanks, Ben. And obviously, as the title says, we're going to be focusing on this past quarter of Q2 in Hamilton and what transpired, and really to see also at a look at last year and last year's Q2 to really understand how COVID has affected the Hamilton real estate market and where we've come this far. And then what's happened in Q2, what's the view forward and what can we learn from that? So I'm also going to show some numbers from the previous quarter of Q1 because last Q2 of 2020, obviously that was the onset of COVID, and it was really a learning period for everyone. And you can see the numbers are very relative compared to even past quarter of Q1 and last year. So we had $265 million transpire of Q2 of 2020, $281 million worth of commercial real estate dollars in Q1 of 2021. And in this past quarter of Q2, which is April, May, and June, of $277 million. And on the outset, it looks very pretty good, like very relative compared to previous quarters, especially for Q2 of 2020, when it was really a learning period for everyone in many regards. So this next graph looks at every quarter since we've been registering real estate information for Hamilton. And that's the beginning of 2017. And the very right bar, that's the gold color here. Q2 21 was his previous quarter. And you can see the slightly duller gold colors or copper colors is the previous Q2s starting from 2017. And you can kind of see it stacks up relatively average. We had a great Q2 back in 2017. As you can see the dollar volumes there. So overall, a pretty decent quarter from this past year. And it looks very comparable again on this graph compared to the Q2 of 2020. However, things start to look a bit weird when you look at the literal number of commercial real estate transactions that took place in Hamilton when you look at Q2 2020. So this past quarter of Q2 2021, we saw 77 transactions, the exact same amount of transactions took in Q2 or Q1 of this year, and then 51 transactions took in last year. So what's the discrepancy here? To look a bit further into this, so this looks a bit of a dog's breakfast, but to explain it a little bit, each line represents a year, and then the Y column on the left represents the number of transactions that took place, and you can see how many transactions took place each month. So the two lines I want to focus on are the two redder ones. So the bright red is 2021, and you can see the number of transactions that took place throughout the year so far, and it's still writing its script. And then 2020 is the more maroon color. And you can really see March when the lockdown really kind of began in mid to late March, and how that was really impacted the Hamilton commercial real estate market from then on. You can see in April, May, and June were some of the lowest numbers of transactions that took place. And that's seems to be normal. Like everything was trying to figure itself out, and not just on the real estate market, just life in general. So it's really safe to assume that obviously this had an impact on commercial real estate market here. And you see, at least for 2020, things kind of picked back up in July and then followed a general, almost exact patterns that we've seen from previous subsequent years, obviously pre-COVID. And it seems to have a similar relationship moving into 2021, where it showed similar lines of activity from previous years. And the only really kind of outlier that 2021 saw was just a weak May for whatever reason, but everything else really stacks up to what we've seen some previous years. So overall, it seems like the view forward, at least from this graph, is that 2021 is going to follow very similar years that we've seen in past, and that it's kind of recovered from that initial kind of figuring out period that we saw in Q2 of 2020. But then again, there's still that question of why do we have the same or very similar transaction dollar values when we looked at last year? And it's mainly because of this one transaction, 140 Main Street West, the Regency on Main. This is a condominium downtown Hamilton, or excuse me, rental. Sold for $142 million at Quadrille Property Group, 26 stories, 321 units. And that is a valuation of $443,000 a unit, which is some of the highest valuations we've seen for the multi-res class, especially of a building of this size. But it is very new. It was built in the last 5 years, I would say. It was previously purchased by Starlight Investments in Q2 2017. They were the seller, and they purchased it for $80 million or $251,000 a unit. So a huge, huge increase. And especially at that time, when everything, again, was sort of figuring itself out in the real estate market, at the very least in Hamilton, a huge confidence boost. And I think maybe this was a deal that was too big to maybe slip through even at that time. To provide some more context of how large this deal was, it was the second largest commercial real estate transaction that year. The first being the Center Mall transaction of $150 million closer towards the East End. And it was the fifth largest transaction in Hamilton ever. And that's going back to at least 1996 from the data that we're pulling. So an absolutely massive whale of a transaction. And that's why you can kind of see the $265 million that transacted in 2020 compared to the 281 that compared to last year, and versus the 50 transactions and the 77 transactions respectively. And you can really see the impact of that one transaction in this graph here as well. So we're looking at the asset values comparative from last year and this past quarter. So white is Q2 of 2020, the gold color is Q2 of 2021. And you can really see nothing transacted in 2020 except for multi-res and industrial land. And you can see again that $142 million transaction really skyrocket and really kind of muddle, I guess, some real understanding of what really took place for the remainder of the asset classes. So I just removed that just for now, so we can get a better sense of how impactful that first Q2 of 2020 was comparative to this Q2 of 2021. You can see industrial land was still fairly good in 2020, but for every other asset class, very muted. And again, I think this speaks to the amount of transactions that took place and just everyone's kind of just getting a feeling of what was going to happen and how the real estate landscape was looking to go forward. And I think you can safely say now, looking at a year from then, these past 3 months, that the market is back to where we've seen, and that was indicated in the transaction levels in the previous graphs that we saw too as well. So everywhere across the board, you've seen increases in volumes, dollar volumes, for every other asset class except for ICI. And I would say that in 2020, that 80 million mark is a very high mark to begin with, and that going over 40 million for ICI land in Hamilton is fairly good, especially when you don't have a really kind of what I call a blockbuster deal that really influences the total volume of a certain asset class, like the $142 million for the Quadrille purchase. So I usually look at the top 3 transactions that took place in the past quarter. I'm going to look at 5 for this one. We didn't really have a super outstanding blockbuster that really influenced this quarter, and that's fantastic to say too, especially when you look at a dollar volume of $280 million total for the Q2, because that's a pretty healthy average, I would say, for any quarter, especially for Q2. And that this was really, if there was a theme for this, it was really showing that there's a lot of healthy deals that took place, a lot of like mid-tier solid deals that really kind of made up the balance of this whole quarter. So the most expensive transaction that took place was right by the airport, 3054 Homestead Drive. If you can see the white hashed outlined transaction here, it's vacant land. It was purchased by Fengate Real Estate, which is a big player in our area. 75 acres, which equals 385,000 an acre, which is also a huge valuation comparative to some other transactions that we've seen in the last year. Chiefly Panettone's transaction just north of here. That's going to be roughly or over $1 million or 1 million square feet of development that Amazon is going to be using. And in Broccolini, which is just north of here, is just chopped off from this picture across from Dickinson Road. And those went for, and other similar transactions went for between $200,000 and $250,000 an acre. So really incredible to see this sort of valuation. A couple of things to be cognizant of. It is directly adjacent, as you can see, to the airport. So maybe there's some increase of value in that. And it does have an industrial zoning associated with it. However, it is zoned M12, which is an airport storage zoning. And their plan is to build a business park of sorts. So it's not a crazy RSC that you have to go through or going from an industrial to residential zoning. So you would think that this is easy enough to pull off. And then that this will be down the pipeline for Fengate. And we've heard through other stories, and if you've joined us for previous Q updates or weekly updates, that the Hamilton Airport is just going gangbusters. It's going crazy, especially during COVID due to the proliferation of e-commerce. And the federal government has even recognized, you can see a piece of Highway 6 there on the bottom left there, that they're going to be expanding that road to attach to 403 to compensate for this increased traffic and the anticipated increased traffic of the tourism sector, as it was one of the fastest growing, I think it was the fastest growing airport in 2019 or 2018, right before the COVID and that was in big part due also to because of its tourism factor as well. The next three largest transactions that took place, I'm not going to focus on them super intensely, but just the general, I guess, theme of these three is just industrial. Industrial is still very, very strong. It's still very much in demand, very, very low vacancy still. And that's one thing that's never really faltered throughout this whole course, even during with COVID. And you see some various valuations here. I'm just going to touch on these very quickly. 17 million on 274 Sherman Avenue North. And this was going to be self-storage, which usually has higher valuations comparative to traditional industrial, I assume, because they can attain some higher rates. And then the second one, 881 Arvin Avenue, purchased by Janko Steel. And I assume this is an owner occupier, just from the name. It's not an investor like something like Fengate or Pierce H Capital. And you typically, or sometimes I would say, see more usually often now than previously in previous years, seeing higher valuations of $200 a square foot. I'd say the average for Hamilton is really approaching 150, maybe 140 between there. And you start to see some sales that go for closer to 200, and you're really seeing it from people or groups that are going to be occupying these spaces, which is a whole other conversation on what I personally believe, where you're going to see industrial status starting to become a new asset class or a growing asset class in Hamilton, where you're seeing occupiers really wanting to own their places of work. And then 590 South Service Road, which is also in Stony Creek, like the previous one, purchased for $100 a square foot, which is around the valuations you see for these types of assets, maybe of this quality, especially of this size of 134,000 square feet. And then lastly, this one isn't a huge one, $10.5 million transaction for Hamilton. It's 56 York Boulevard, located right downtown Hamilton. But why I wanted to put this one out here too, it's the fifth largest transaction that took place in last quarter, is it was purchased by TAS Design Build, big developer, a conscious developer out of Toronto, moving into Hamilton. And we've seen that story pop up time and time again. 70,000 square feet. It includes that kind of brick building you see on the left side. It is a designated heritage building, has a huge story in Hamilton, built in the 1800s, primarily the home for Copleys, which builds suits in the area. And they've built a new facility just down the road and occupied that facility. And it has potential for 30 stories. It's in a fantastic location. As I mentioned, it's located right downtown Hamilton, across from the Farmers Market, from the Central Library, and formerly Copps Coliseum, now known as First Ontario Centre. And really, what I'm going to be speaking in the second half of this presentation, it's really going to help, I guess, the housing shortage. That is not just cognizant or being felt in the GTHA, but seems to be all over Canada. And Ben actually put me onto this fantastic article from Scotiabank titled "Estimating the Structural Housing Shortage in Canada. Are we 100,000 or nearly 2 million units short?" And I'm just going to go through this portion very quickly, not to get into the weeds, but really just try and emphasize, if anything, that nationally, we at different areas that we're experiencing a housing shortage, and then we'll kind of get into the GTHA and Hamilton and how we're experiencing that too, and how that's affecting the real estate market. So this quick quote here is showing that Canada has the lowest number of housing units per 1,000 residents of any G7 country. The number of housing units per 1,000 Canadians has been falling since 2016, owing to the sharp rise in population growth. And I should mention that this is a large part, in part, due to the conscious effort by the government to increase immigration in Canada, and that's had a huge impact. And you can see with quotes like that, and it's some of the graphs we're going to go through how that's impacted Hamilton. I've talked about this previously in other Q updates, but something I haven't touched on right now is that subsequent of that, since 2016, I think officially in 2019, Toronto was the fastest growing city in North America. And according to the RLB Index's latest report, it has 2/5 of all cranes in North America. They look at 15 cities in North America, but just really highlighting all the development that's happening there. And that's in huge part due to the immigration that's happening there and the population that eventually ripples out into the surrounding communities like Hamilton. So you see this graph here. Apologies for the quality of the graphs are a little bit small in the actual report. You see Hamilton in 2016 had 381,000 units per 1,000, or 301 units per 1,000 residents. That's dropped to 377. Same thing in Toronto has a slight drop. And even if you want to look at Kitchener, that's dropped as well between 2016 and 2020. And on the graph on the right, just showing the population comparative to the rolling sum of Canadian home completions. And they've dropped since 2016, 2015. It had a slight uptick in 2020, and that's because immigration has been paused during COVID right now. So completions are able to catch up slightly. Also, another report came out just very recently in June 2021. Ontarians on the Move Local Intelligence Report in Canada, and they found some interesting statistics as well. And it's basically these anecdotal things you hear everywhere, but basically Toronto is growing like crazy. Ontario's population has grown by 1 million between 2015 and 2020, and previous to that it was only 600,000 from the previous 5 years. So really showing the impact of that immigration conscious effort. And a lot of them go to Toronto and subsequently the other areas around the GTA. Home building in Toronto, which experienced the highest levels of population increases from international sources, was unable to keep up with the population growth. This has caused a process known as drive until you qualify. So looking for more affordability and a drive into places like Hamilton. Home building of all types in 10 years in Hamilton was able to keep up with the population growth from both international sources and young families moving from Toronto. And you can see it in graphs like this that were also present in this report. I'm just going to touch on these quickly again. But the first one on the left, so the pink is from the years 2010 to 2015, and the green is 2015 to today. And it shows the growth rate percentage of the population. You can see Hamilton shows a very similar pattern to Ontario, where we've seen our growth rate almost double between those two 5-year segments. And then I thought it was really interesting, international student enrollment. So the pink color is McMaster graduate, green is undergraduate, and then the bluish purple is Mohawk College. International student enrollment, you see from 2012, Mohawk wasn't there. And then it was around just 1,000 students per segment, and it's almost tripled when you look at the Mohawk College and McMaster University undergraduate enrollment to 3,000. You might have, and that's from 2018, you might have seen from that a lot of announcements and buildings that are really looking to compensate for that increase in enrollment. And you see the William Thomas residence that's already built downtown. You hear the announcements of the graduate residence, McMaster's building downtown Hamilton, their undergraduate residence, which is right adjacent to campus. And there's a number of other smaller unaffiliated residences that are starting to pop up or will be popping up in the city of Hamilton as well. A couple more graphs here. I thought this was interesting. This is from CIBC, also kind of recognizing the fact that housing prices have increased in the peripheries, and that this is not a trend that's been caused by COVID, as we've seen from the graphs previously, but really being accelerated and supported during the pandemic of people looking for more space, cheaper homes, as the headline here notes, not commuting, need space, buying in the burbs. And what I want to focus on here is the yellow line, which is Toronto. And the Y graph looks at year-over-year house price growth, specifically for Q4 of 2020. And you can see that, and the x-axis is the physical distance of kilometers away from that city that they mark. So Toronto, you've seen about a 4 or 5% increase year over year in housing prices. But as you get to over 60 kilometers away from Toronto, which is where Hamilton is, you're seeing a growth of 20%, which is what roughly Hamilton's growth has been year over year right now. really just solidifying that there's a huge demand in Hamilton, and even in a time when there's been a shorting kind of crisis really everywhere. But demand is being in Hamilton due to its relatively affordable housing stock. And we've talked about this before, and we've seen this impact. This is the latest RAB stat for this previous month, just showing the number of transactions for housing and their average sale prices. And you can see wherever category you look, whatever area of the city you look, you've seen an appreciation quite considerably take place in Hamilton, and especially in Ancaster, where you see the true suburban areas of Hamilton, or traditional suburban areas of Hamilton, going from 860,000 to 1.2 million is the average for June 2021. And it's no surprise you see news releases like this. The city of Hamilton reached $1 billion worth of building permits for 2021. And as the highlighted quote shows here, it's the fastest time they've ever reached this $1 billion mark. Hamilton has reached $1 billion mark for the 11 of the last 12 years. But this past June was the fastest we've hit $1 billion. So really showing this is in part due to, yes, a lot of home purchases and renovations associated with that. And we've seen that in the materials world right now. But also, obviously, this is being hugely affected by a lot of commercial developments, ones that are like the Pantones, the Fengates that we see by the airport, and then the tons of residential development that's happening in Hamilton now or being proposed. And obviously, other groups that are doing this recognize what we've been seeing from the past 5 years is huge population increase and this huge demand for housing, and Hamilton is able to facilitate and is looking to become more and more of a traction option. So here are some proposals from the last quarter. I'm just going to go through these quickly. 165 James Street South. Both of these buildings, this brown brick and this white brick, are the same address. They're on the same lot, but in different areas. By Core Urban, almost 100 units for rentals, and even this brick building in between at the top is currently under construction. Again, this is all Q2 information or proposals. 101 Hunter Street East, Colterra development, 27 stories, almost 300 units, condo, right across from the GO train station in Hamilton. So it should be great for anyone that's looking for that sort of amenity. And then also, interesting enough, this parking lot just to the north, just south of Landmark Place, there is also having some information that might be a potential tower as well. And then 213 King Street West. This is right downtown, really close with them. When I mentioned before, that graduate residence that's being proposed by McMaster, 30 stories, 110 suites, and 241 units. That's going to be a mix of hotel and rental is being proposed. And so and these are all that just took place in Q2, these proposals, and these aren't all the proposals that took place in Q2. And something that's really interesting about all of these proposals that I've shown you, these are all on existing surface level parking. Hamilton has tons of that. And I think that's one advantage that Hamilton has over maybe some other cities located in GTA, is that we have a ton of space that's being very underutilized. It's not its highest and best use. And a lot of groups like Rancor, Core Urban, Colterra, and outside groups from Toronto like Taz are recognizing we have this abundancy. It's a bit easier. Don't have to do any demolition or amalgamation of other properties. If you have these very large surface parking lots that are willing and able to accommodate this growing population, and especially in a market like Hamilton, which relatively to Toronto is a lot more affordable. And in huge news as well, I'm going to go through this really quickly because I want to be cognizant of Mitch's time. But the LRT project is back on the table, as announced both from the federal government and the provincial government. They're going to be putting in $3.4 billion towards LRT. So that'd be 1.7 billion each. The city has agreed to enter in a memorandum of understanding, and they're hoping to really get into that beginning of August. And it's supposed to be for the full route, starting from Eastgate Mall in the East End into McMaster University in the West End. And then also the other big news was the Downtown Entertainment Precinct Group agreement was approved. So HUPEG, they're called the Hamilton Urban Precinct Entertainment Group, entered an agreement with the city to really revitalize the entertainment facilities, the big three in Hamilton, which is First Ontario Centre, formerly Cops Coliseum, the arena, First Ontario Concert Hall, and the Hamilton Convention Centre over a period of 49 years with no monetary contribution from the city. We're going to be putting in $50 million towards the First Ontario Centre, which is going to include a new exterior facade and video board, comprehensive transformational lower bowl, expanded concourse, and new flexible curtaining system for the upper section. They also want to repurpose the York Boulevard area, which is right now just unusable fire escape stair. And then this plan also includes over $500 million in auxiliary mixed use development too. So big development. And in this group is being led by Carmen's group and includes partners like Lena, Meridian Credit Union, and Paletta Group, which are big players in the area as well, and have some other projects in Hamilton as well. And so the construction is expected to be in 2 phases, at least for the first Ontario Centre, and it's looking to begin in the fall of 2022, with the remainder beginning after that. And here's the rendering that they've shown around Copps Coliseum. This is very much conceptual. And then the architects are fantastic too. Just looking at their website, they have done revitalization projects of arenas for Wells Fargo Center, which is located in Philly, TD Garden, which is located in Boston, and MSG, which is located in New York. So they have quite the experience, and it'd be really interesting to see what they come up with Hamilton. And if it looks anything like this, and then you can see York Boulevard, kind of main section right there on the left side, if it gets activated like that. So overall, I think it was a fantastic quarter considering everything for Hamilton this past quarter. And just looking at what's transpired in the past with immigration, the housing prices that we've seen now, and the type of attention that we're seeing, I think we're really honestly going towards a development boom once things start to become a bit more and more normal, as what we used to know it as for Hamilton. So with that, that's my piece. I appreciate everyone being here, and I'll pass it back to Ben.
Awesome. Thank you, Alex. Very interesting, and nice to see some parking lots in Hamilton having some movement on them. So I know there's quite a few, so we could probably use a few more additional housing for sure in the downtown. Your last couple of updates have outlined like lots of institutional money through this kind of COVID period. It looks like that trend has continued. However, transactions were kind of down over COVID. And especially in the more private commercial markets, are we seeing those transactions increase now, or the number of transactions, or is it still just kind of the big institutional money?
No, I think obviously you've seen, as I mentioned earlier, the impact that COVID had in 2020. But I would say if you look at it from a 5-year perspective, starting in 2017, the overall trend was that we saw more transactions take place in 2017, however, not as many dollar volumes. And you're seeing a slightly less, like you're seeing about maybe the high 80s in 2017 for number of transactions take place in 2017. And now the average is closer to the high 70s. So it's not a huge drop, but you're seeing more money being thrown into the city, more money being invested into the city. And it's from those groups that you kind of are alluding to, like Fengate and some newer ones out of Toronto, and even some new areas of commerce, really. Like the airport is really kind of like a really shining star for the city. The port is growing like crazy, and now film, which is a whole other story, is really going gangbusters in Hamilton now as well. So I think a lot of those factors really kind of play into what the types of people that are entering the city right now.
Makes sense. That's great. Thanks again for the insights. Quite the quarter to break down, and definitely exciting for Hamilton's future. But with that, we are going to transition over to our guest speaker for this event. Mitch Jarvie from Addy is going to be talking about the future of home ownership, it looks like. So Mitch, take it away.
Awesome. Thanks, Ben and Alex. Great job. It's very inspiring to see the community that you guys belong and what's happening there. It's very exciting. Very exciting indeed. So yeah, let's talk about the future of home ownership. You're probably wondering who I am. But before we get into that, let me just talk briefly about disclosure. Anything that we talk about in this are all, as for information purposes only. I'm not here to suggest that anyone invest in anything that they're not comfortable with. And this is not financial or any professional advice. My lawyers make me say that. So we can move on. So who am I? My name is Mitch Jarvie. I'm the Director of Acquisitions here at Addy Invest. We are an online investment platform that allows anyone and everyone to invest in real estate for as little as $1. That's not coming through, but our mission is to enable every human to be a homeowner. Why are we doing this? Simply because we believe everyone should have an opportunity to become a homeowner through access to real estate investing. And that should be done with any dollar amount, regardless of your income, gender, age, or even your background. We found a few years ago, there's a huge issue in commercial real estate. And the issue isn't necessarily the actual industry itself. It's more around our current situation with millennials and Gen Zers who have grown or are starting to grow into adulthood, and they feel overwhelmed in real estate, specifically in the Canadian market. For most young people, this barrier to get into real estate is just too high. And 80%, I think, at the moment of US millennials see this exorbitant student loans keeping them out of real estate. The financial crisis has left the generation apprehensive of big, high-risk investments. Instead, they're YOLOing on GameStop, and they're dumping all their money in Dogecoin to hope for big wins. And we're here to hopefully educate and change that. So just, Alex had some great stats about what's happening in Hamilton, and I thought, why don't we throw in some numbers too? 72% of millennials still consider owning a home to be a top priority. It's culturally programmed as a rite of passage in their life journey and is seen as a wise investment. However, 2/3 of millennials still wish they had gotten into the market sooner, despite the fact that most who have found the way have developed regrets based on how much work it turned out to be. So despite all of these barriers, your dream, or anyone's dream at that moment, of home ownership is still alive. And we're doing it through Addy. And we're doing it with the ability to have great partnerships with what we call enablers. And that's you, Ben, and you, Alex, on Forge and Foster. If you look now sort of at the perception of commercial real estate, you come across some of these, 6 bullet points. It's too hard, massive amounts of risk. You need to be all in or otherwise you're out. You don't have knowledge. You don't know how to look for off-market deals. And there's just this limited access to opportunity. As you were showing, Alex, previously, a lot of these deals that were happening in the Hamilton area in the last quarter, we're all probably switching from one large institution or wealthy individual to another, mostly off market, and you don't know that they're occurring until they're actually done. The solution that we found is, by all the work that we're doing here at Addy, there's finally a chance for everyone to invest in any asset class within real estate across Canada with ease and without compromise. We're delivering all the benefits of investing in something real and tangible, but without the hassles of looking after it for years to come. We save that to you guys at Forge and Foster. So what are we doing? First thing we do is we're looking for properties that we feel good about. We feel confident in investments, and they're available to literally everyone in Canada. We're making investing in real estate available to you by letting you decide the terms that fit your life. You decide how much of a home you want to own, and you don't need to make any life-changing compromises in order to get into the market. And we're doing that with 4 key promises. First one is absolute accessibility. If we're not able to offer our real estate to everyone who has a chance to get in, then we're not actually doing what we're set out to do. And we see that as simply as limiting the barrier of entry to $1, which is pretty amazing stuff if you think about it. The second is hands-off ownership. So we're removing the unexpected headaches that come with property ownership, from contracts, landlording, juggling maintenance. We handle all the details so the owners can just pick an address, invest their money, and be done with it. In addition, we're looking at expert co-owners. So we're in this together, both as investors and expert partners. Not only do we share the risk by investing alongside all of our members, but we offer a robust selection of properties that have been pre-vetted by experts with decades of experience. And the last is that it's tangible. By investing in real estate, as you guys are aware, you're investing in something real that you can drive by, you can point to it, you can follow updates to see how it's doing. There's an investment that you can be proud of. So I'll give you guys an example. We're doing, we just launched our 11th property. This is Willigan Commercial Park in Calgary that we did a number of months ago. As you guys are probably aware, anyone who's listening to this, if you look at something like this, that $30 million purchase price, you're typically putting 20 into debt. You're looking at 10 in equity. And then from that 10 million in equity for the acquisition, you're probably putting in maybe 40 to 60% as the purchaser. That's the general partner at 6 million. And then you're looking to start raising some capital to finalize the deal. Typically, you're looking at maybe a $4 million raise. You can get that from institutional. You could be looking at splitting that up into smaller limited partner pieces with wealthy investors or accredited investors. The great thing is that Addy is looking to acquire one of those pieces of that equity to make the rest accessible to Canadians. And this is just a fractional. I think that was more of a video for you, Alex, that didn't come through, but just breaking down a Lego house into tiny pieces. The ownership structure is as you see here. Addy goes into the sub company. That sub company buys that LP unit and then sells the shares of the sub company to individuals in Canada. So how do we potentially make money? There's a couple ways. As an investor in any of these deals, you're going to receive a liquidation event. And I'll use a great example later on about some of the things that we've done with Forge and Foster. And some of them also have distributions. So if you have a tenant that's paying rent, that rent goes back into your pocket through a distribution. So through technology, Addy is reducing transaction costs to essentially zero while simultaneously increasing information sharing and transparency. And I think this is something that we've built legal technology with Fasken and audit technology with KPMG. We want to reduce time spent on sharing information on each property. Members can log into their account and see all the details of their investment, what the projection returns are, when the exit is, what the tenants, if they paid rent, all that sort of stuff is available through the platform. And what are the benefits? Well, everyone can invest in local real estate with an amount that fits their budget. As property value changes, so does their investment value. You can have diversified ownership over multiple properties, higher rates of return, and real estate is managed without the hassle of actually being a homeowner or a landlord. And we do this all through technology. You can become a commercial real estate investor in under 8 minutes. Sign up is quick and easy. You make an account, you put some money in your wallet, you choose your investment, sign your documents, and you're done. The workflow on this chart shows you just how easy it can be. From the mobile application, you verify your email, you verify who you are as a Canadian, you make your transaction, and then we do everything on the backside. We countersign all the subscription documents, do your red filing, and then transfer the property into your Addy wallet. Here's a few more screenshots of what it looks like. How we select our real estate is done through our investment committee. Here's a few individuals that sit on that. We have people in every region that looks at every individual piece of property that we put on the platform and get their expert advice as to if it's a good investment or not. Probably wondering, okay, so how do we make money as Addy? This is the great thing. I think it's something that as a bunch of tech geeks and a bunch of nerds here, we're definitely seeing that this part of the market in terms of real estate investment from a crowd investing perspective was a bit flawed. There was a lot of fees being taken away from people's investments. So what we've done is decided to go with a membership model. That ensures that every dollar that is invested goes to the property and then also comes back to the investor. There's no cents being taken away from any of their memberships, or sorry, from any of their investments. That's all thanks to a simple $25 annual membership that gives them access to all of these great deals that, and I'm sure you guys could admit, probably weren't available to anyone in the retail market when they first were acquired. So I'll walk you back a couple of years. This was our proof of concept. It was 1956 East 13th Ave. It's a beautiful house just off Trout Lake in East Vancouver. We purchased it for $1.6 million. We have a 4-year timeline and turn it into a redevelopment. We were basically trying to figure out, would a bunch of random Canadians on the internet buy a house together? And the answer was yes. There was average age of our investors was about 39 years. We had 305 people invest in that property with an average investment of $4,500. Our smallest investment was $1 and our largest was $95,000. Alex, you can keep going. Yeah, there you go. Here's just a spread of all the people that invested in that property from the lower mainland of Vancouver. Then it goes further out into parts of Vancouver Island, into the interior, and we even had a few people out east, parts of Toronto, Hamilton, Ottawa, that sort of thing. A couple of things we realized during that proof of concept was we didn't want to be a general partner. We didn't actually want to acquire and manage or do the development. That's not our expertise. Our goal is to provide access to real estate opportunities with technology to Canadians. And the way that we found that we could do that was by divvying up these LP units with great opportunities and great general partners that already existed in the Canadian marketplace. And the first one that we did with Forge and Foster, and it was one that I was really excited about. I've been looking for RV resorts and campgrounds. I felt like this was a huge opportunity with the increase in RV sales in the last 18 months and the fact that no one could travel. There's going to be a huge influx and a huge opportunity for people to be interested in this type of asset class, as well as be involved in something I think that they could be proud of moving forward. And it was great to finally meet with Forge and Foster and see that you guys had something that sort of aligned in that regards. We had I think it was a $250,000 LP slice, if I'm not mistaken, Ben or Alex. And it sold out, I think, in 8 hours. We had 460 plus Canadians invest in this with an average investment of about $460 each. And we're really excited to see what you guys do with that and give an awesome return to our members. And then we followed that right up with the ever famous One West Avenue South. Really like this building. I think you guys kind of threw us a bone here and really helped us provide a pretty sexy looking building on some great terms and really, I think, allow for residents of Hamilton to get involved in something that they knew and that they loved. We had 460 plus Canadians invest in this one as well. And this one sold out, I believe, in 12 hours at a $350,000 issuance size. This one, I think, is sort of going to help show that, our dedication to the Hamilton market and our dedication to work with Forge and Foster moving forward is really going to allow for all people in Ontario and I guess specifically in the Hamilton area to be part of this rejuvenation of the city and to be part of something special. And we appreciate and we thank you guys for that. To bring it back out west, we just launched this for the first time. It's a purpose-built rental building in Mission, just outside of Vancouver. It's got 105 units. 11 are going to be affordable housing units, which we all know are a big requirement out in the West, as well as based off some of those graphs that you showed, Alex. Looks like all major Canadian cities are looking for affordable housing. This is going to be a 6-year development with distributions happening in late 2023. That went live yesterday with a $500,000 issuance, and we're only about $100,000 left. And once that's sold out, we're back with you guys. We're going back to Hamilton. I'm really excited to see what we do with 29 Harriet. I know you guys have some really exciting murals and vinyl murals that you guys could be doing on these. I love the artistic pieces that you guys are putting together. So I'm really excited to bring this to the masses and allow anyone in Hamilton to invest alongside you guys in this building. I think it's going to be pretty awesome. Stay tuned for that. So who do we have behind backing us? Well, here's a quick snapshot of our board of directors. As you can see, we have quite a good group of people. Jeff Booth, who was the former CEO of Build Direct, Steve Evans, who created Pirate REIT, which transacts and dies over $6 billion. And a few members of our advisory board. And then I'm not sure, this is a video that I had sent over to Alex. It's our CEO, Mike Stevenson, talking about our Addy manifesto, but I can just read it to you. I won't do it as well as he does, but the manifesto for Addy simply goes like this. You probably could have owned a home by now. You could have studied a bit harder in school or worked a few more long nights and weekends. You could not have traveled. You could have kicked the latte habit. You could have said no to good sushi and better cocktails. And to that one concert you'll never ever forget. But you didn't. And that's a good thing. Because the very same reasons you don't own a home are the things that make you, you. And that's why Addy exists. To make getting into real estate possible without turning your life upside down, without changing, without compromising. Because when you can own real estate for as little as $1, everyone's a homeowner. I'll have him come watch that on the YouTube live later, see what he says. So anyone that's on here, give it a shot yourself. Forge and Foster is providing first year of your free membership. If you follow the, I don't know if you knew that, Alex or Ben, but I just threw that in there now. You guys are getting, if you go to that website, addyinvest.com/Forge and Foster, you can sign up there and Alex will pay your bill for the first year and you can invest in the building on Harriet. Any questions?
Awesome. Thank you, Mitch. Certainly share your company's mission thesis. It's been a focus of ours to democratize access to commercial real estate as much as possible on our side, and certainly our partnership with you, we're excited to provide that to our communities as well. And you're right, there's an opportunity for everybody here on the call to go sign up through that link, which we will provide in the YouTube comments, to go in, get a free membership, check out the opportunities that Addy's providing, and be involved in real estate for in a way that's a little more accessible. So just a couple quick questions on my side, Mitch, that I imagine most of the community would have, although just being partner, we have a little more familiarity. But how does Addy source deals, and what kind of due diligence do you provide before offering up investment opportunities to your community?
Thanks, Ben. Yeah, great questions. It's quite I know it's pretty much the same. I would assume that you guys go through when you're sourcing your deals. We rely heavily on our general partners or our sponsors or developers to provide us with as much of their due diligence that they provided during their process for us to go alongside with them. A lot of our partners have to come in through a referral from an existing partner. We understand that we don't want anyone coming in and necessarily providing us with false information. So there's a quick property screening checklist that we go through. Why is this opportunity in front of us? Is Addy the best partner for this type of investment? Is there a competitive advantage, and what's the potential downside scenarios? And I guess the big thing that we ask ourselves is, why would Addy's capital be any different than an institution or, say, an accredited investor? What's the differentiation? What's the differentiator with our capital than say your high net worth individual who's investing in the properties? And I think you guys understand there's a whole community awareness side there. There's the ability to have local support. I think the Starbucks that we did, not with you guys, but we did about a year ago. It was in Chilliwack, BC. There's about 600 investors in that building, and I think just under 100 of them were from the actual Chilliwack community. We have a very strong understanding that I bet you everyone that wants coffee in Chilliwack who invested in that property probably go to the Starbucks that they own the building that Starbucks rents out of. So it's just looking at opportunities like that, like what sort of impact is having 1,000 local Canadians in a building do to support the businesses, to support from a commercial standpoint, or if it was an apartment building, how does having each tenant be a part owner, how does that drastically change the narrative around the management of that building? So these are the key sort of things that we look at. We want to work with people who don't want our money. They don't need our capital. They see the ancillary effects of our capital as the biggest sort of benefit. Answer your question?
Yeah, it does. No, that makes a lot of sense. Well, that's great. And I guess what's next steps for you guys as a company? Is it going to stay still mostly expanding across Canada, heading into the US? What's the sort of next step?
Yeah, we get asked this quite a bit. At the moment, we have quite a good deal flow to sustain the membership for at least the rest of this calendar year, and then as we get more and more of our DD done, we're going to be able to focus strictly on opening up Canada. We do have ideas of what to do next. We just haven't made any decisions yet as we change our roadmap to reflect the demand of where, and that's the great thing about building this community is we get asked quite a bit of where to go next. And that's one of the reasons why we came to Hamilton was our membership said, can you guys get something in Hamilton? Hamilton's the fastest growing city in North America. I don't know if that's true, but it sounds good. But members said we want something in Hamilton. So yeah, we're just following the direct direction of our membership.
Awesome. Well, it sounds like the birds have woken up over on your side, and for those who don't know, Mitch is currently in Hawaii, so we're all very jealous on our side. What's the best way to connect with Addy if there's any other questions? Mitch, is it through the website or someone directly?
Yeah, just connect with me directly. You can find me on LinkedIn, Mitch Jarvie, or send me an email at mitch@addyinvest.com. I'd love to talk to anyone if they're interested in learning more or just talk about real estate in general.
Amazing. Appreciate that. Thank you very much, Mitch. Thank you, Alex. And that wraps it up for our second quarter market update. Look forward to the next couple quarters here in 2021, but sounds like all great things for Hamilton as well as Addy. Thank you, everybody.
Thanks, Ben. Thanks, Alex.